Hey everyone, Longacres Finance here, and it's time for the April 2021 Quality Dividend Stock Watchlist. Each month I let my stock screener select the best 30 quality dividend stocks to include in my watchlist for the month. This month there are 7 changes from the prior month, which means 7 stocks are gone and 7 new ones take their place. The watchlist had a decent return for the month of March, gaining 5.65%, and the 18 potentially fairly valued and undervalued stocks performed even better with a total return of 7.39% during March. For perspective, VIG, the Vanguard Dividend Appreciation ETF, had a total return of 6.04%, and the S&P 500 total return was 4.38%. So the potentially fairly valued and undervalued stocks performed the best last month, and with that outperformance, they slide into first place since inception, which was September 1st, 2020. The potentially fairly valued and undervalued stocks are up 14.37%. The S&P 500 total return is in second place, up 14.31%. VIG is in third place, up 14.07%. And the entire watchlist trails with a total return of 11.43%. It is incredibly hard to outperform the broad market, and although the watchlist has only been around for 7 months, I hope it'll generate alpha in the long term. The intention of this watchlist is to give you ideas for further research. The stocks in this watchlist mostly pay low dividend yields, but instead they should offer faster dividend growth and more capital appreciation in the long term versus higher yielding stocks. While that hasn't been the case recently, if you also watch my high yield dividend stock watchlist series, I think in the long term, the quality watchlist will offer better returns. Without further ado, let's jump into this month's stocks, and I will come back to the performance later on in the video. Let's start with the information technology sector. There are 9 technology stocks in the watchlist, and they are Applied Materials, Intuit, Lam Research Corporation, MasterCard, Texas Instruments, Visa, Microsoft Corporation, CDW, and NVIDIA. CDW and NVIDIA are the new additions this month, and we have lost Amphenol, Jack Henry & Associates, Accenture, and Monolithic Power from the prior month's watchlist. The tech stocks collectively offer a low 0.85% dividend yield, but have an excellent average 5-year dividend growth rate of 22.03%. The highest yielding stock is Texas Instruments with a yield of 2.19%, and the fastest dividend growth stock is Lam Research with a 44.59% 5-year dividend growth rate. Only 2 of the 9 stocks appear to be potentially fairly valued based on dividend yield theory, and they are Visa and CDW Corp. Moving on to the financial stocks now. And we have a total of 7 stocks from this sector. And they are Charles Schwab, MSCI, Market Access Holdings, Intercontinental Exchange, T. Rowe Price Group, Moody's, and Progressive. Moody's is a new stock to the watchlist this month, and we have lost JP Morgan Chase and FactSet Data Research from the prior month's watchlist. The financial stocks offer a slightly better dividend yield of 1.05%, with T. Rowe Price offering the best individual dividend yield of 2.51%. Collectively, they have a 5-year dividend growth rate of 22.45%, with Progressive offering the best dividend growth at 40.71%. 3 of these 7 stocks appear to be potentially fairly valued or undervalued based on dividend yield theory. They are Charles Schwab, Intercontinental Exchange, and T. Rowe Price Group. Next up is the consumer discretionary sector, and we have 6 stocks here. They are Domino's Pizza, Lowe's Companies, Home Depot, Tractor Supply, Dollar General, and Lithia Motors. The new additions are Lowe's, Dollar General, and Lithia Motors. And this sector did not lose any stocks from the prior month. Consumer discretionary stocks offer an average dividend yield of 1.13%, with Home Depot offering the best dividend yield of 2.17%. The 5-year dividend growth rate is a bit lower compared to the prior 2 sectors, but still a solid 15.46%, with Home Depot also offering the best dividend growth rate of 20.52%. Only 2 of these stocks appear to be potentially undervalued based on dividend yield theory, Domino's Pizza and Home Depot. The next sector is healthcare, and we have a total of 4 stocks here. And they are United Healthcare, Thermo Fisher Scientific, Humana, and West Pharmaceutical Services. Thermo Fisher Scientific is a new addition this month, and the sector did not lose any stocks from the prior month. These 4 stocks offer a pretty low average dividend yield of 0.62%, with United Healthcare offering the best individual yield of 1.34%. The 5-year dividend growth rate is mixed here, averaging 14.36%, with 2 strong growth rates from United Healthcare and Humana, and 2 average growth rates from Thermo Fisher and West Pharmaceuticals. Humana happens to have the highest dividend growth rate of 21.75%, but United Healthcare is pretty close behind them. 2 of the 4 stocks appear to be potentially fairly valued or undervalued based on dividend yield theory, and they are United Healthcare and Humana. Next up is the industrial sector, and we have a total of 3 stocks here. And they are Roper Technologies, Expeditors International of Washington, and Northrop Grumman. No new additions, but we did lose Cintas from the prior month. These 3 stocks offer an average dividend yield of 1.11%, with Northrop Grumman offering the best individual yield of 1.8%. The average 5-year dividend growth rate is rather low compared to the other sectors at 11.97%, with Roper Technologies having the best individual growth rate of 15.44%. Two of the three stocks appear to be potentially fairly valued or undervalued based on dividend yield theory. Roper Technologies appears to be fairly valued, and Northrop Grumman appears to be undervalued. And last but not least, we have one stock from the materials sector, and that is Sherwin-Williams. Sherwin currently pays a dividend yield of 0.88% and has a 14.87% 5-year dividend growth rate. Based on dividend yield theory, they appear to be fairly valued at the moment. The stock also happened to recently split its shares 2-to-1. If you're enjoying the video, smash that like button and subscribe to the channel. The average dividend yield of the watchlist is 0.95%, with an average 5-year dividend growth rate of 18.55%. Only 12 of the 30 stocks appear to be potentially fairly valued or undervalued based on dividend yield theory. This number has been trending down, as last month we had 18 stocks potentially fairly valued or undervalued. Let's take a closer look at past performance of the watchlist. In March, the best performing sector was consumer discretionary, with the 3 stocks from the watchlist returning 12.24% during the month. The best performing individual stock was Home Depot with an 18.89% return. The next best sector were the industrial stocks. The 4 industrials had a total return of 10.07%, with Expeditors International of Washington leading the pack with a 17.26% return. The next best sector was materials, with just Sherwin-Williams returning 8.48% during the month. In 4th place was the healthcare sector, with 3 stocks averaging a total return of 7.8%. United Healthcare had the best individual total return at 12.39%. Information technology was next, with 11 stocks averaging 3.66% for the month. The best individual tech stock was Applied Materials with a total return of 13.04%. And last but not least, we have the financials, with a total return of 2.57% from the 8 stocks. Progressive led the pack with a total return of 11.24%. One additional performance metric I track is how a dollar cost averaging method would work with this watchlist, assuming you would invest in either the entire watchlist or just the potentially fairly valued and undervalued stocks. In March, the entire watchlist would have returned 6.52%, and the fairly valued and undervalued portfolio would return 8.18%. Both strategies outpaced VIG, the dividend appreciation ETF, from Vanguard that was up 6.03%. And after March, the potentially fairly valued and undervalued portfolio moves ahead of VIG on a cumulative basis with a total return of 14.28% versus 14.07%. The entire watchlist is still pretty far behind, with a cumulative total return of 10.37%. Let me know if there are any additional metrics or information you'd like to see in these monthly watchlist videos. That's it guys, thank you for watching. See you next time.